Well, good morning, good afternoon, good evening, wherever you are on this beautiful day, a Thursday, towards the end of, the end of March already. Hard to believe, but this is Mark Turok from Exeter 1031 Exchange Service, Business Development Officer. And today I've got with me Senior Vice President of Cantor Fitzgerald Capital, that's John Bacigalupi, and also from Whitehall Parker, Robert Zink, licensed security representative and real estate broker. Today, we're going to be talking about the 1031 exchange and DST diversification strategies. We like to call our webinar series the I'm a Seller Now series. You'll understand why as we get started and get going and hear more from John and from Bob. But just want to let everybody know that there is a chat button in this presentation. So if you would like to, have any, or if you have any questions for us, feel free to write them down, and we will get to them towards the end of the broadcast and go through them with you. And look forward to having that back and forth. So today, I'm going to start off and kind of walk everyone through the 1031 exchange process, give a little introduction to Exeter 1031 exchange and Exeter Trust, and then John will jump in and talk about Cantor Fitzgerald and the DSTs, and Bob will kind of wrap it up with more of the client perspective, what he's seen out in the field, and questions that kind of come up from the clients out there. So just so you get a kind of an all-around perspective on this process and what it means. So with that, I'd like to kind of start off and get moving here. With that, John, did you want to say hello to the audience real quick? And you're there in the background. Everyone sees our pictures up there right now. They'll see us here in a minute.
Yeah, no problem. Thanks, Mark. Really appreciate the opportunity. I think, as you mentioned, we're coming off really a crazy 12 months, and especially in the real estate world. This was a pandemic that was had a lot of effect on the real estate world. And I know Mark and myself and Bob are very busy right now because there are a lot of clients that want to use IRS code 1031, and they want to be in a more passive position. And I think that's where the Delaware Statutory Trust can be a problem solver. So I am really excited to be a resource for you. And I look forward to my portion in a little bit. So Mark, I'll kind of go back to you.
Perfect. Yeah, and just so everyone knows here, we do these monthly. We've decided to target the end of the month. So last Thursday of the month, we'll be doing this series. So mark your calendars. We'll be reaching out to you as well, just to kind of let more people know about that. Just like John said, we offer ourselves up as an educational, as an educational tool for everybody. So with that, looks like you've got Bob's just joined us here. Bob, do you want to say hello just for a minute before I jump in here? Oh, looks like you might be on mute there.
Can you hear me?
Yeah, we got you there.
Okay.
Yeah, just for a quick little introduction. I just introduced myself, and John went through his introductions. Just want to say hello to the audience here. Yeah, and then I'll jump into my presentation.
Minor technical difficulties this morning, but I'm Robert Zink with Whitehall Parker, and sell real estate securities, which this is, and work with John on the securities end and Mark on the 1031 end, and here to help you in any upcoming exchanges. So go ahead, Mark, and we'll see your presentation.
Thanks, Bob. Well, alrighty, let's get rolling here. So I'm gonna go ahead and share my screen, and we should be good to go. Let's see here. Switching over, and there we are. So perfect. So my presentation, I do this quite a bit, is the Unraveling the Mystery of 1031 exchanges. And we do this as often as we can because there's a lot of information out there that is misleading and also kind of lacking. I tell you this, yesterday I had a client call in, and he mentioned that he was trying to figure out as much information on the 1031 exchange process as he could himself. And when he called in, he had some additional questions, and it was the stuff that we know, but it's just not out there. So in this case, we just had very minimal information that he was going by, and really appreciated just filling in those gaps. And that's really what we're there to do. So I'm going to start off here and just kind of walk everyone through. Okay, here we are. So Exeter 1031 Exchange Services, we are a qualified intermediary, so, or you might hear the term an accommodator. We're exchange accommodation title holder, and we work in all 50 states and foreign countries too. That does set us apart from our competition. We're one of the very few qualified intermediaries that will do foreign to foreign 1031 exchanges. So if you have your overseas property and you want to sell that and look to another property overseas, you could do a 1031 exchange with us. So we work with all the exchanges, forward 1031 exchanges, which are the most common, your reverse 1031 exchanges, as well as improvement exchanges, or what you might see out there, construction or build-to-suit exchanges. Again, just kind of filling in the gaps there, what I was mentioning. So we're actually one of the few QIs out there that has any direct government oversight. This industry is not regulated. A lot of people are kind of surprised by that, but we are. We're one of the very few that has any government oversight, and I'll explain that in a minute. We've administered 1031 exchanges over the last 15 years, and our CEOs and team has conducted well over 125,000 1031 exchanges, our CEO specifically, during his past 35-year career. So what it sets us apart also is we're more consultative and advisory. We have answers, go ahead and ask. So we offer ourselves up 24/7, 365. So if you call on a weekend or on a Sunday, you will talk to somebody, might be myself or one of the other business development officers, might even be Bill Exeter himself picking up the phone. So going back to the government oversight. So we, a couple of years ago, started our own trust company. So went through the process of the regulation, getting all the paperwork together, and we're licensed, audited, regulated by the Wyoming Division of Banking. And so we offer fidelity bond coverage, errors and omissions coverage, fiduciary insurance coverage. And then with our 1031 exchange process, we offer all of our clients a qualified trust account. We also offer qualified escrow accounts and custody accounts, as well as the self-directed IRAs. The 1031 exchange is, John had mentioned it earlier in the introduction, but it is the part of the Internal Revenue Code, that's section 1.1031 of the Treasury regulation. Honestly, this is what it is. It's a tax deferral strategy that allows an investor to sell rental, investment, or business use assets and then defer the payment of the income tax consequences by reinvesting in qualifying use like-kind replacement property. Benefits, obviously there's income tax consequences, so the sale of real or personal property may trigger the taxable gain. That taxable gain can then be deferred or excluded with proper tax planning, and then that keeps the investor's money working for them and keeps more money in their pockets. Again, you can do this throughout your lifetime. That's another question that does come up. We like to say it's more than just a transactional tool. It is a wealth building tool. And then you might hear a lot of other folks call or use the phrase swap until you drop, because literally you can do that till you keep swapping out properties until you pass on, and then your heirs get a step up in cost basis and the taxable gain goes away at death. So I briefly spoke about these different structures out there. So we have the traditional forward exchange, that's simultaneous versus delayed exchange, where you're selling first, buying second. That's the most common out there. Like 99% of the business we do is the forward exchange. And we also have the reverse exchanges, and that's where you're going to be buying first and then selling second. And there's a parking arrangement through us. We become the exchange accommodation title holder. A little bit more complex, involves, especially if it involves financing. If it's a cash deal, it's a lot more simple. And then we also have improvement or build-to-suit construction exchanges. That's where you're going to be selling your property and then using those exchange funds to make improvements to that replacement property. So you go out, buy the dirt, and then you're going to construct on that. The issue there is you have timelines to work with, and we'll get into that. But all of these exchanges have the 180-day timeline to find and close on that replacement property. So when you do an improvement exchange, you still have that timeline to work through and work with. So what is the role of a qualified intermediary? That is a question we get asked a lot, like, why do we need your services? Or what do you do? We do prepare the legal agreements and related transactional documents. We receive, hold, and safeguard the 1031 exchange funds. And as I mentioned earlier, we do serve in that advisory, more consultative role and guide the clients through the process. So, we don't disappear. We're more than just a processor of paperwork. We're there to help answer questions. We're there for the client at the beginning of the exchange and through the exchange, and even after the exchange if questions come up. Again, we safeguard our clients' funds. Government oversight, as we say, is critical. We use a qualified intermediary that is licensed, regulated, and audited. Again, that's why we went through that process, to set ourselves apart and to also provide that extra layer of security for the client. Bonding and insurance, again, when you're talking to qualified intermediaries, ask them this and verify that they have enough fidelity bond and errors and omissions and fiduciary insurance coverage. And then again, qualified trust accounts, do they have that? I mean, for us, we offer the qualified trust account with dual signatures. So nothing happens with your funds unless we sign off on that and you sign off on that. So qualified use property, I get that question too. So what exactly is that? And really, it's all about the investor's intent, which is absolutely critical in the whole process. So for a 1031 exchange, you need to hold that property, that real estate, so it's real estate for real estate, as a rental for income production or investment, capital appreciation, or business use. Property that's held for sale or personal use will not qualify. So I will get calls from flippers and people that are doing rehabs or something, turning a property around really quick. And I have to explain to them that you're not holding it for the long term, you're holding it for a sale, for quick turn. So conversions, that sort of thing, those would not qualify. It's interesting that we mentioned that, but there is no specific required holding period that exists in the code or regulations. The only real requirement is that the investor has the intent to hold that property, again, for rental, investment, business use. And then, we like to say the holding period, if you can hold it for 12, 18, 24 months, the length of time is not as critical, but it's important. Just clearly shows your intent, what you're trying to do, the longer you can hold it. So it's something to consider, but we like to say, a perfect scenario would be 2 years where you're straddling 3 tax returns. So if you can get one tax return, good, 2 tax returns, great, and so on and so on. A like-kind property, real estate, again, is any kind of real estate qualifies as like-kind as long as the qualifying use requirement is met. And then foreign property, 1031 exchange, I'm not going to spend a lot of time on that, but you can exchange foreign real property for other foreign properties. So the basic question I get is, can I exchange from, let's say, Europe into the United States? No, but you could do, let's say Germany to France or France to Germany. That's fine. Again, like-kind property, investors can exchange between all of the following asset classes. You have single, multi-family, residential, commercial office buildings, retail shopping centers, vacant land. You got the oil and gas rights, mineral rights, and then fractional ownerships. You've got the and Delaware Statutory Trust, which John is going to speak to and walk us through that and explain why that's such a fantastic option for investors. Non-like-kind property, again, primary residence, I still get questions about that, second homes, vacation homes, and what we like to say, anything that has excessive personal use. And then non-like-kind property, what is that? Ownership interests in an entity that generally do not qualify for the 1031 exchange treatment. So that's partnership interests in a partnership, shares of stock owned in a corporation. There are exceptions. They do include, disregarded entities such as single-member LLCs, land trusts, Delaware Statutory Trusts, and fully revocable grantor trusts. Exchange deadlines and identification period. There is a 45-day identification period. So right when you sell your property, you got the closing occurring with escrow and the recording occurred. The very next day starts your identification period. So you have 180 days to close on property, but the first 45 days of that is spent identifying new property. And those are calendar days. Like I said, it begins at the close of the transaction. Strategies to improve your situation would be, and I use this a lot with clients, if you can delay the closing, that can buy you more time. Start looking for properties early, and then also consider using Delaware Statutory Trust properties for sure. So the deadlines again, complete your exchange by what we say the earlier of 180 calendar days, the due date or the due date of your income tax return, including extensions. It's only really an issue between October 17th and December 31st, but we put that in there just as everyone needs to know. So again, it's 45 days plus 135, that's your total for 180 calendar days, not 45 days plus 180. And then COVID-19 impact, we did have an extension for COVID last year, which ran from April to June, but we have not heard of any additional extensions at this time. So I leave that up there, just, people do ask me about that. Again, when you're doing the identification, you must comply with one of the identification rules. There are three. First one, the most popular one, is the 3 property rule. It's the simplest. You go out there, you look at 3 properties. You don't have to have a formal offer on them, but just something you're considering. And then of those 3, you just have to close on one of those properties in the timeline that we spoke of. Then you have the 200% fair market value rule. Again, is, let's say you're looking for more than 3 properties, 4, 5, 6. And a simple example, let's say your property sold for $1 million. You can look, identify as many properties as you'd like and close on them. Just make sure that they do not exceed, in this simple example, to $2 million. The 95% exception rule, again, is, for portfolio managers, normally, large portfolios, 15, 20, whatever homes, properties. And that is, again, if you're looking to close on that large portfolio, you just have to make sure that you're closing on 95% of the value of that portfolio of homes and properties. The identification that you provide should be specific and unambiguous, using either the street address, legal description, or the assessor's parcel number. And then that is actually delivered to us. So that's part of our packet we send to you, but you'll send that actually back to us, filled out, and then we sign and date that. And I also like to mention on that as well that you can change that list as many times as you like during the first 45 days, but once you hit day 45, anything on that list is set. So you can't add any more properties to your list after day 45. So in order to defer all of your income tax consequences, you must have the intent to reinvest in like-kind replacement property, trade equal or up in fair market value based on the net sale price, and then reinvest 100% of the equity net cash proceeds into that replacement property. So you can always add cash, but you cannot withdraw cash without paying a tax. So we have partial 1031 exchange transactions. Those are permissible. People do ask me about that. That's where you can pull out cash from the 1031 exchange transaction or trade down in value through the 1031 exchange process, obtain a larger loan or other debt on the property, which results in cash left over. So those are allowed, because some people think it's an all or nothing situation. It's not. It's not. So that's kind of a quick, rapid tour through the 1031 exchange process. But this last slide is just my contact information. Again, at the end of our presentation for everybody, I'll give you my phone number again. But here it is. If you ever need to reach me, it's my desk line here. That's 619-764-6332. And then our website is Exeter, EXETER, 1031.com. And then you might be able to see my email address there. It's M for Mark, and the last name is Turok, T-U-R-O-K, at exeterco.com. So with that, I'm going to go ahead and hand this over to John. Let me go ahead and stop the share and push it back there, and then go to John here.
While Mark's doing that, Mark, thank you. Excellent job as always. Are you seeing my screen?
Yes, I can see your screen there, John.
Does it say Delaware Statutory Trust on it?
No, I'm seeing the desktop.
Okay.
We see your desktop.
Multiple
There we
screens
go.
sometimes is not a good idea. All right.
Now we see it. We got you.
Excellent. Well, I think Mark threw a lot of information out at you. I think the takeaway that I have is that when you're doing a 1031 exchange, the qualified intermediary is one of the most important resources that you have. They make sure you follow the rules and everything is done really step by step. So I know we threw a lot at you in 15 minutes, but the qualified intermediary is going to be one of the best resources that you have. Mark at Exeter is been doing this for a long period of time and is really a true professional. So please use him as a resource. And the one thing I always tell people is before you start that 1031 exchange, before anything is in escrow, you want to reach out to Mark before and get that process going. And that process includes the qualified intermediary. It usually includes, Bob Zink as an advisor, as well as your CPA. All of these people on this Zoom WebEx are here to work with you and for you. And I think that's really, really important. I think with what's happening in the real estate world right now, the Delaware Statutory Trust is becoming more and more popular. And so what I'm going to do is kind of walk you through what a Delaware Statutory Trust is. The reason we're able to talk to you about a Delaware Statutory Trust as a 1031 option is because of IRS ruling 2004-86. And that allows the Dst Structure, Delaware Statutory Trust, to be eligible with the IRS to fulfill 1031 obligations. So we have a lot of investors that are maybe getting a little older or just don't want to deal with tenants right now. And instead of finding a Walgreens or a duplex or a triplex, it makes sense to have more of an institutional, larger asset that is managed by a company like Cantor Fitzgerald. So we're providing the asset, we're providing the debt, and you're hands off. And, with what the world and what we as a country has gone through over the last year, I believe more and more people are contacting us saying, I've done 2 or 3 other exchanges, but I don't want to deal with tenants and toilets and taxes anymore. And so the Delaware Statutory Trust is becoming more and more attractive. Let's talk about some of the advantages of the DST structure as well as some of the disadvantages. We're very open about this is not for everyone, but it's becoming more and more popular. So instead of that duplex across the street, you can have fractional ownership of a $100 to $200 million apartment building or a triple net asset. We concentrate in large multifamily assets in growing areas. Think Dallas, Texas, Fort Collins, Colorado, Nashville, Tennessee. And so we're very fortunate at Cantor. We own the real estate company Newmark, and that gives us a lot of data into what areas are performing and what areas aren't. Because although multifamily by far is performing, there are some pockets that we would not suggest investors go into just because we're still in pandemic times. So access to large institutional assets is important. Number 2, you're passive. You don't have to get a call in the middle of the night. The pipe broke, the window was broken, come and fix it. You don't have any of those responsibilities. I talk about my father with clients a lot. In his mid-70s right now, used to work on some of his rentals himself. It kind of gave him something to do, as my mom would say. And now it's about spending more times, hopefully more with COVID, with grandkids, and not, being the super of the duplex. Diversification is a huge point. Depending on the size of the account, you can have a little bit of multifamily, a little bit of exposure to Amazon and a distribution center. So you can diversify not only by location, but also by types of real estate. We provide debt. Cantor is a large real estate company, and chances are we can probably acquire debt at a little bit cheaper price than you individually. And we offer non-recourse debt. That's a fancy way of saying, as Mark said, you need to replace debt and equity, but you can do it in a non-recourse way, or where you're not personally responsible for that debt. And that's something people are very, very important with. And then finally, kind of estate planning. As people get a little older, I know for me at 42 years old, it's about getting my trust in order and understanding, what I want my boys to inherit and what not to. And estate planning is a big part of where a DST can come in. And then finally, closing with confidence. We have the asset for you. We have the financing for you. And it's really just about completing the paperwork. We have a lot of people that maybe this isn't their first choice, but the real estate market is so competitive right now that it's becoming a more attractive option for them. I always try to be fair and balanced. So I don't want to just talk about upside. I want to talk about some things that you need to be aware of with a piece of real estate in a Delaware Statutory Trust. Some people think these are benefits, that DSTs are illiquid. You're making a commitment to that 5 to 7 year time period. So if you are thinking you want to flip this in 2 years or 3 years and have more control, the Delaware Statutory Trust is not for you. You're giving up the ability to call us in 2 years and say, guess what, I need that money. So that comes into play. And unlike a stock or a bond with real estate, I think most people are aware, you can't just go to your computer, type in a ticker symbol and sell. So there's no public market for something like this. And investors don't have control. They're giving that control up to Cantor Fitzgerald, a 73-year-old firm with 12,000 employees all over the country. And we have a fiduciary responsibility to perform and manage this asset, provide that monthly cash flow. And then quite frankly, we want to manage this asset for a long period of time. So after that 5 to 7 years, the majority of our investors say, Cantor did a good job. They told us what they were going to do, and then they did it. And at the end of that 5 to 7 years, the money goes right back to Mark at the Qualified Intermediary. And then you have a choice. You can do another DST through Bob, or you could, find that duplex or that vacation property. You're not making a commitment to the Delaware Statutory Trust in perpetuity, but just about that 5 to 7 year time horizon. So I think that is very, very important. It's also very important to understand what's happening in the real estate world right now. Financing is very, very low. It's not as low as it was 60 days ago when the 10-year treasury was under 1%. But if you kind of look back over the last 50 years, real estate financing is at very, very low rates right now. And so to be able to lock in low rates is usually very, very attractive in real estate. Bob has been doing this type of business for decades, and he can talk to you about sometimes interest rates throughout his career were in double digits. And we're talking about interest rates in the 2.5 to 3.5 range right now. So a real strong opportunity to add leverage with real estate at attractive financing. Another big trend is that these types of assets that have performed over the last year are going up in value. I think when the pandemic first started, I used to work at a money manager called Franklin Templeton in the Bay Area, and Sir John Templeton, he was knighted, like to say Sir John, used to say, buy when there's blood in the streets, buy when there is, when no one else is buying, whether that's real estate or the stock market. Warren Buffett talks about this. When no one else is buying, that's when you buy. When everyone is buying, that's when you sell. And what's happening with the real estate world is that it is very competitive. And a lot of individuals want to do an exchange and they're just not able to find a replacement property, or they're not able to find one at a proper valuation. You know, I live in the San Francisco Bay Area. Believe it or not, during the pandemic, you know, houses have gone up 20–30% in our neighborhood in the last year. It's crazy in some cases. So if you're trying to do an exchange and find an asset on yourself, it's just going to be, I believe, more competitive than ever, as a lot of people are transacting now. Before we got on the phone or this WebEx today, Mark and Bob and I were talking. We've never been busier. There's a lot of pent-up demand with real estate transactions, because if you go back over the last 4 quarters, there was not a lot of transaction volume in Q2 of last year or Q3. So now there's a lot of people that are wanting to transact, wanting to exit that headache asset, don't want to deal with tenants. And I just think that is a great time to be talking about a Delaware Statutory Trust. So we have some people, it makes sense for them right out of the gate. Some people use it more as although it's not an insurance product, it's an insurance situation where on day 42 or day 43, you can contact Bob and Mark and say, you know what, I want to close on these 2 assets. Here are the addresses, but let's identify a Delaware Statutory Trust as a backup option. More and more people are then coming to that backup option, because there's not other backup options. Once you've identified these assets, you have to close on one of them. And it's just important to make sure that you have options. And when the final step is either a Delaware Statutory Trust with great cash flow, or writing a check to Sacramento or Washington, D.C., you know, that Delaware Statutory Trust becomes even more popular. So those are kind of all of my prepared remarks. I'm going to stop the share screen, and Bob, do you want to provide some kind of color on how you work with clients and kind of what you're seeing in the marketplace now?
Sure. I've been doing real estate exchanges for 52 years, and I'm part of a couple of large national exchange groups, one of which started in San Diego, the Society of Exchange Counselors, 69 years ago. We're having our 70th party Newport Beach this fall. And so I've been doing exchanges kind of in the sense of the people on the screen and on the room forever. It's a great way to move to the next asset. And as John just mentioned, finding that next asset in today's market can be difficult. And sometimes things show up, or loans where it's not possible to complete that exchange. I have a client now that has a backup identified. He's a developer. He's got an apartment house in escrow. He's buying a piece of land where he wants to build a property this year, and he's found out there's an easement issue that he's not going to be able to get resolved. So instead of having to pay a tax, he's got a backup that's already closed, the loan's done, there's no issues, and he can move into that backup property. So tying up a property in that situation is easy. Another little story I want to tell that kind of creates example of some of the things John was talking about. But recently I worked with a longtime existing client, a lady in Michigan. She sold a large apartment house that was probably 65% of her net worth. And it was a little over $3 million. The numbers don't matter. That's just what this story is about, or what this example. But we exchanged into a leased Amazon building in Michigan, which was a property with John's company, into a self-storage portfolio in the Southeast, and a multifamily project in Huntsville, Alabama, where the Air and Space Facility is proposed to be built. Given that this was a large part of her net worth and she's very conservative, she asked one of the obvious questions. She said, well, Bob, what if all 3 of these properties fail? And I said, well, Nancy, if a leased Amazon building fails, a quality 2-year-old apartment house in Huntsville fails, and self-storage in the Southeast failed, then the whole country failed, and it won't matter what you bought. And she just laughed and said, you know, you're right, but I had to ask the question. So one of the things that I can help investors do, and we can go through John at Cantor and other sponsors, if we can't find it with John, is there's always property available in multiple markets. And as this example, we went into 3 asset classes in 3 markets. So this lady feels very comfortable. She doesn't have to deal with the properties. She gets 3 checks every month and has no hassles, no involvement. So we like to say it, you have all the advantages of owning real estate without the management responsibilities. That's all taken care of by Cantor. And as John also mentioned, they're going to get slightly better loan rate. They'll get better management. And through their network of people in Newmark Frank, they're out in the market finding some of the best available deals. So it's a great way to move on to that next step where you're just tired of, you know, the taxes and tenants and toilets and all those issues that we wear out on as we get older, that instead we want to maybe play tennis and golf and see the grandkids or travel. So I've been in real estate for 50 years, exchanging for all of that time. So I have a real estate and a securities license. So I can answer your questions, refer you to the right properties, and help you with options. Should that be your first choice, or if it's a second choice, something else that hasn't been mentioned, but maybe you exchange into something and there's $300,000 or $200,000 left over. Well, what can you buy with $200,000 today? Probably not a quality asset with any cash flow. The minimum in a DST is $100,000. So that $200,000 or $300,000 could be exchanged into a institutional quality real estate property somewhere in the nation. And maybe something John didn't mention, but oftentimes these properties are in states with no state income tax. So that's another advantage. And often older investors have owned these properties forever. It's why they want to exchange. They have a low basis, so a big tax problem. Typically, these properties have 50% debt. So you get a step up in basis and better tax advantages. Also, as John did mention, there are no capital calls allowed. So oftentimes in our rental properties, a roof blows off, HVAC unit goes out, tenants move out and leave units trashed. Capital calls aren't allowed in a DST. So you don't have to worry about that call from your property manager on a Saturday that we need 20 grand to fix X. That can't happen here. So there's just lots of different advantages to this, and I'm happy to help you, you know, call Mark early in the process so you have all the time possible, and we'll get you hooked up with John or people like him and find appropriate property or properties. Again, it's a great way to diversify into asset classes and different markets. So, Mark, do we have the ability for people to ask questions?
Yes, we do. We have a chat room, and we invite everyone there to, you know, present your questions to us. And we do have a couple of questions that kind of came in earlier. But yes, we have the chat room there, just waiting for some questions. But I do want to speak, and it's been brought to my attention as well, about the situation with the 1031 exchange and issues regarding the new administration and what they're looking to do with the tax code. And so we do get those questions, and I'll speak a little bit to that. And you guys, certainly John and Bob, you know, jump in and you know, give me your takes on that as well. But you know, yes, so you know, the Biden administration had presented during the campaign season that they were going to you know, try to do away with the 1031 exchange, or really, you know, take some knocks to it. And truth be told, every 3 to 5 years, it seems like there's always somebody trying to attack the 1031 exchange. there has been, the trade associations out there, NAR, and like I said, the different exchange groups out there, they're very much aware and very much lobbying Congress. Both sides of the aisle have an interest to keep the 1031 exchange. So they're out there, just we can't give up the fight. Never, lean back and say, well, it's never going to happen, because you do have to be real about the situation and look at the current situation we find ourselves in today and think that, is it going to, you got to do something. So we always tell all of our clients to talk to your representative, find out who your representative is in Congress, and let them know that you want to keep the 1031 exchange and what a powerful tool it is. And to get rid of it would be pretty ridiculous, we think. Obviously, we all have our opinion on that. I'm sure you'll like to share that. The latest I've heard as well, looks like, from what I've heard, the Biden administration will be looking at the tax code prior to the 2022 midterm elections, and they will, probably look at the 1031 exchange there as well. We have seen what would they do to it? Would it be, just taking it down to, people making over anyone making $400,000 or more would not be able to do an exchange. Anyone making less than that would be able to. We've seen these types of chatter back and forth. So we're still monitoring that. Very concerned about that. But trust me, the trade associations like NAR, they've got boots on the ground, and they're hitting the halls of Congress to make sure that we do not lose the powerful tool that is the 1031 exchange. But John and Bob, do you want to chime in as well? I'm sure you're hearing different things or different more information out there.
Sure. I mean, our approach to this is that the Biden administration, or I shouldn't say the Biden administration, the Biden campaign on the stump when he was campaigning did talk about maybe we need to look at this. Maybe and their idea was to only offer 1031 exchanges to people with household incomes less than $400,000. So that was kind of their on the stump, talking about, well, this is what we could do. Historically, I spent a couple of years in Washington, D.C. Usually people say a lot of things on the stump and then they govern from the middle. With a divided Congress, and specifically with the Senate being 50-50 at this point, I don't think there's a lot of legislative risk at the moment. Now, the climate may change in the next year or two, but if you kind of look at some of the bills that were passed, they were 50-50 right down the middle, and they didn't have Republican support. So I think something as important as IRS Code 1031, most Republicans in the Senate would be against it, as well as centric Democrats. So I'm not sure if they have the votes at this point. Maybe something happens down the road, but this is something that is coming up a lot, and it's very topical. So Bob, I'm not sure if you have any comments there.
Oh, just a little bit. Curiously, our Society of Exchangers quarterly meeting ended last night. It was in North Carolina, so I attended by Zoom. But we had a little session on this topic, and most of the investors and brokers in the room talking to their congressmen and senators and tax counsel kind of feel, as you just said, John, that the appetite to really make a change probably isn't very high, that things get said on the stump and during, campaigns, but, and it happens every 4 or 5 years, as you said, so feel pretty comfortable that it won't be changed this time around either.
That's good to hear. Like to hear more good news like that, more boots on the ground. So, and different perspectives, So that's, yeah, but that's kind of where we're at too. And I know, John, you've got that experience in DC, and I worked in Sacramento years and years ago. So I agree with you on that. Like, you govern in the middle. We campaign to the left, to the right, but ultimately we do govern in the middle. So, like I said, but they're lobbying all the time. So just keep it up and just let your your representative know your strong interest in keeping the 1031 exchange, alive and going and prospering. So, but I guess get back to some other questions here. question I got earlier was, when's the best time, going back to the QI side of things, when's the best time to reach out to a qualified intermediary? First and foremost, make sure you do it before you close escrow and the recordings occurred. I still get those calls from people that have closed and accepted the funds, and at that point it's too late. But I usually tell people right when you get that offer and we know who escrow is that we're going to be working with, that's the best time to give us a call a couple of weeks before the closing. Allows everybody that time to go back and forth, because I find that a lot of clients they've got a lot on their plate, and it's best to get things done earlier rather than later. But that being said, I mean, we can open an exchange very, very quickly too, so it's not not to worry about that. And then also, I want to get back to the Delaware Statutory Trust, because you guys had mentioned that using that as a backup strategy. And I'll tell you, so many people that well, two stories. First, when I would do the trade shows pre-pandemic, I remember going around or sitting at my booth and talking to people about what options they had, and have they even heard of a Delaware Statutory Trust? Because a lot of these people at the trade shows were mom and pops that owned the multifamily apartment buildings for years and were getting tired, but they'd never heard of the DST. And so their eyes lit up, because they'd just never heard of it before. So this the reason why we do this is for education, because the more information we get out there, the better. And the other side, I was going to ask, both of you about the timeline, because I usually tell people that, especially if it's like you mentioned, if it's not their first choice, let's say their first choice is physical real estate that they control, so that, they're doing the 3-property rule. That third choice being the DST, they can actually close on the DST very, very quickly. And to go from no knowledge to complete knowledge and closing it's a very fast process. Correct? Or you guys want to jump in there and kind of talk about that a little bit, or your experience with that, with clients, maybe different stories that you've heard. I mean, I'm sure Bob, you've probably got some really fun stories about that.
Well, I have calls probably once a week, every 10 days, from somebody that their ID'd property is falling apart or has some jeopardy. This developer I mentioned, he called me on day 44.
Right.
The property the next morning, and I think that property is rapidly moving to number 1 because of the problems. If it doesn't, there's no obligation. So there's always property available. And as John mentioned, they own it. The sponsor owns it. There's no risk of it not closing or not getting the loan or the environmental coming through and being a problem. It's owned. And then some of you will have properties that this is a primary source of income. You close on a property next Wednesday, you start accruing income that day, and the 10th of the next month, you'll get a check or a direct deposit, depending on which you chose. So there can be a very little lag in your income from your equity, and that's an advantage. I mean, sometimes that can be a big lag. You sell something, you identify something, and get a loan, and it closes in day 170. You've maybe been 3-4 months without income. That won't happen here. So it's another big advantage. John, you got any other comments there?
I just think the fact that the asset is already provided, large institutional asset that, quite frankly, most individuals that we work with can't afford that large $100 million asset to do on their own. And so to have an asset like that, right, not diversified by 3 tenants in a triplex, but 450 units is a offering that we have right now in the DC area. It just makes a lot of sense. And especially, I think, with the year that we've all been through, you don't want to pay taxes, you want to avoid it, but to just be a passive owner and collecting that rent check and spending more time with loved ones, grandkids, etc., as the world gets back to normal, I think there's a lot of value there for clients. And we think this business is going to continue to grow. The Delaware Statutory Trust business is about a $4 billion with a B business a year, and we expect that to continue to grow. We're not getting any younger, we're not getting any healthier, so a lot of the baby boomers own an immense amount of real estate, and then we're seeing younger people in their 30s and 40s, seeing their parents do very well with real estate. You know, if you bought anything in the California 20 years ago, the exponential growth is astronomical. So a lot of younger people are getting involved, and they bought that duplex, they bought that triplex, and now they want to continue on it. But you know I have a 6 and 8 year old, and that's a full-time job in and of itself. So there's only so many hours in the day. And I think this pandemic that we're going through is going to shed some light on what's important for people and what they want to do with their time. And
Right.
Managing a triplex and knocking on or fixing the stairs when they break is just not a priority now. So,
You know, I think another thing we're seeing a lot in Oregon, and of course it's coming up in California, but we have rent abatement, we have more rules. Tenants have more rights than ever to not pay the rent or pay partial rent. Those things are coming up. So the hassles of being a landlord are ever increasing, the costs. And, you know, John kind of alluded to it, but just the stress of ownership today is never been higher. And as we get older, stress is lower and lower on our priority list. Part of this title, I'm a Seller Now, came about a year ago when a client and friend in a marketing group who was very active real estate broker, owner, lender, worth a fortune, called and said, Bob, I'm selling an apartment house. I'm looking at a DST. Can you help me? And I said, well, of course. But I said, I'll call him Joe. I said, Joe, you've always dealt with this on your own. You're an active broker, owner. Why now? And it got real quiet on the phone. And he almost choked up and he said, because a week ago, I got a dementia diagnosis from my doctor. Well, he's a seller. He has adult kids that can't deal with it. Now, most of us won't ever have that diagnosis, but broken hips, we're all getting older, you know, especially Bob here. The rest of you, maybe not yet. But the day comes that getting out of the terrible tease of the toilets and trash and taxes and enjoying our time and getting stress out of our lives becomes more and more important. So it's an option, and let us know if we can help in any way.
Yeah, exactly. Fantastic, gentlemen. Appreciate the time today. And yeah, it just like I said, I noticed too, right when COVID hit, I was starting to get even more interest in the Delaware Statutory Trust from you know, totally different investor, you know, just because we didn't know what we didn't know at the time. It's like traditionally, like you said, it's the baby boomers, that's kind of their bread and butter. But I was getting even younger investors asking about the DSTs and wanting to know more about that. And so it's just sped up the process, but it's a fantastic tool. And I think, you know, like we said, we provide this forum every month. We chose the last Thursday of the month, so mark your calendars on that. We'll be getting more invitations over the next couple of weeks as we keep rolling this out. But we're here to offer education, and we're here to answer questions. And I'd just like to kind of sort of wrap this up as we end here today. Just provide my contact information. Again, my direct line, if you need a qualified intermediary, have questions. No question is dumb. All questions are, I look forward to all questions. They're all smart, very good questions. So my number is 619-764-6332. And don't be afraid to ask any questions, because I've heard everything, and trust me, it's you want to be you know, basically take as much information as you can and learn about this process and equip yourself to be a better and stronger investor. And my email address is mturok, that's T-U-R-O-K, at exeterco.com. And gentlemen, do you want to sign off? After we sign off, just provide your contact information, and we'll kind of conclude for the day.
Yeah, no problem. Thanks again, Mark. I think this is a great educational tool for people to be able to ask questions. And, you know, I work through Bob. So Bob's going to provide his contact information, and I'm happy to kind of set up a call, again, just to go into more details. So really great to see everyone, and I'll let Bob have the last word, and we'll see everyone next month, last Thursday of the month. Take care.
There we go. Thanks, John.
We haven't mentioned it, but feel free to invite friends or your tax counsel. If tax counsel, legal counsel would like to get on and ask questions, they're more than welcome. So
Absolutely.
Robert Zink, Z-I-N-K, phone number 503-880-6968. And my email is robert@zinkrealtyadvisors.com. So thanks for your time, and we'll see you next week or next month.
Next month, yeah, last Thursday of the month, everybody. So thank you very much for joining us today. We appreciate the time, and we always look forward to doing these presentations and offering up our services and educating you all. So if you have any questions, feel free to reach out. Again, thanks to John Bacigalupi from Cantor Fitzgerald Capital and Robert Zink here from Whitehall Partners. Again, appreciate it. Gentlemen, thank you, and we'll see you next month. Thank you all very much. Bye-bye.
Thank you.